Hey superstars, welcome back to the channel. Today I've got a lovely breakdown for you and you're going to want to log this. So make sure you've got your pens and your notepads very close and let's get on the charts. Today is all about a fabulous setup that you can implement. And this is going to be a step-by-step breakdown of how you can implement it. And the potential that it really has is phenomenal. Right? So fundamentally, we want to just give you a synopsis as to what we're really looking at. Now, I want you to understand that the New York session often creates a liquidity sweep. In other words, it creates stop hunts, and with the stop hunts that it actually creates, that's giving the Asian session a little bit of directional bias for when the session opens. Now, if you work a 9-to-5 job, if you're really busy and you can't do early morning trading, then you want to lock into this. Because what I'm going to show you here is how to set your charts up. So one of the first things that I want you to actually do here is look at your time zone here that you've got. All right, so where your time zone is, I want you to click on it. And I'm in the UK. I'm normally on UTC London. I want you to click on New York because I need this to be reflecting New York's timing. All right, now to the bottom section, we're going to look to see where 8 p.m. is. Why 8 p.m.? 8 p.m. is just before the session starts, which is the Asian session that we want to zone in on. So we want to look at the highs of New York, the highs and the lows prior to the 8 p.m. opening of the Asian session, right? So let's look here. Fundamentally, we've got 8 p.m. right around here. So I'm going to take my horizontal tool. No, sorry, my vertical tool in this case. We want a long line. So this is our 8 p.m. Perfect. So where are our highs and our lows prior to 8 p.m.? So this is our 8 p.m. Everyone seeing it? I hope you are. So that's our first step. We need to find that 8 p.m. mark. And before 8 p.m., we want to find the highs and the lows. So ideally speaking, we would be on the charts before 8 p.m. looking for our highs and our lows. That's your first step. You realize I'm not fluffing and I'm not, flexing or anything. I'm just giving you the solid sauce right here. Now, fundamentally, once you come on the charts before 8 p.m., and this is 8 p.m. New York time, not London time, guys, New York timing, right? You want to fundamentally be on your 15-minute time frame. As you can see, I'm on the 15-minute time frame. Now, once you're on the 15-minute time frame, your next option is to highlight your high, which is this. That's your New York high, and your low, which is this. That's your recent high and your recent low before your 8 p.m. And I'll put 8 p.m. here so that you fully understand what this horizontal line is for. So it's the 8 p.m. Oh, sorry. Where's my text box? It's the 8 p.m. move here. There we go. So that's what that vertical line is for. And the horizontal one is our high, which is here. So we'll put H for high right here. And we'll put L for low right here. This is our low. So we've got our levels, yeah? So fundamentally, we've got our highs and our lows. What are we waiting for? This is our next step. We're waiting for Asians open to take out the high or the low of this previous session, right? Which is New York. So when we get that takeout, fundamentally, we're looking for something like this. And I'll take my here. That's what we're looking for. What is this? This is price breaking above the last high, and we have pushed up above. This is our entry signal coming into play. Now, why do we want to see this? We want to see that clean break of structure above that previous high because this is where the liquidity pool lies. This is where the liquidity pool lies, and you want to know where the pool is at so that you don't drown in the pool, but you survive in the pool, right? So ideally speaking, once we get this happening, our next step is to wait for the displacement, which is a shift back into the zone, which is fundamentally all of this happening right here. You can clearly see that price has shifted back into the zone. So what do you do next? Your next move would be to wait for price to come back into your area, right? And you could fundamentally outline here on your 15-minute that last candle before the push down, wick to wick. Yeah. And that becomes your entry zone, which is this green candle, right? Now, ideally speaking, you would be looking a setup, simple 1 to 3. You'd pop a short position on, ideally once price comes back into your zone. So your entry normally is at the top of your zone, stop loss above this last area, and your aim is a 1 to 3. No matter what, it's a 1 to 3, right? And ideally speaking, you would have seen that you would have followed through quite nicely on that, right? So fundamentally, you're looking for your highs and your lows prior to your 8 p.m., which is the opening of the Asian session. Once that happens, you're looking for the liquidity to be taken and then a displacement or a shift in price back into the zone. Once that happens, you wait for price to come back into that order block and you take the setup, right? That's literally it. Nothing complicated. And I'm going to show you this not just once, not just twice, but I'm going to back test this here with you so that you can literally see it. And I want you to go back test it as well, right? There's nothing wrong in doing your additional research. So let's see if we can find another 8 p.m. here. The move prior to right here is our 8 p.m. right here. So we're going to mark it with another vertical line, 8 p.m. Now, ideally, you won't have to mark this. I'm doing this because of backtesting, because ideally, you're going to be on the charts before 8 p.m. So this is my 8 p.m. right mark. And that means I want to highlight my highs and my lows. So just before 8 p.m., now I'll move these. This would be my high, and this would be my low. Hope you're seeing that. So now recent highs and recent lows would be in this area here. This would be your high right here. And this would be your low. Okay. So high and low identified prior to 8 p.m. Once we identify that, the next option is to wait for what? Or liquidity sweep. Yeah. Once we get our liquidity sweep, we've got the high and the low here, then we've got a potential, right? So in this case, you've got price wicking below right on the onset, right at the opening area there. Price wicking below, and then a huge engulfing candle showing you the direction. Now, you would have the opportunity here to get in because at 8 p.m. directly priced already wick there. Gave you double rejections around this area. You could literally buy here, right? Now, I'm going to show you fundamentally that you could have had two plays here. You could have bought here on the close, because what happens is that at 8 p.m. it rejected, pushed below that low, and then it did it another time. Stop loss below here, and you're aiming for your regular 1 to 3, no more, right? You would have made that. Now, ideally speaking, above the high, you've seen that we've broken above the high, and we're now creating displacement. You see that? Displacement, we're changing up, we're shifting structure. Now, you begin to highlight this area here, and you have the ability to take a setup right at this level here for a sell back down to the low. You'd have still made profits because it took the liquidity out to the upside as well. So you would now have the opportunity to say, okay, let me highlight this zone. And once price comes back into here, I'm able to actually take a sell right into this area here. Yeah. Right into this area here. Anywhere here would give you a plausible setup. And even if you waited until price, broke out of it, pulled back into it, you would still be able to take a setup, because ideally speaking, if you even took it here, you would need to have your stop loss here anyway, above here, above the liquidity pool, right? And you would still be aiming for how much? 1 to 3, right? Now, sometimes you may not meet the criteria, it's fine, because ideally speaking, you're looking at structure and you're looking at what the price action is actually showing you. But I'm literally just showing you a simple framework, a simple process that you can implement, especially if you're a hard worker who is not able to trade the opening of the New York session. You do have the opportunity to look at these liquidity pools above the New York highs and lows at the end of your work schedule, right? So let's see if we can find another. So we would have gotten two there, two plausible ones that took place based on the simple structure of, us grabbing the liquidity and then doing the market structure shift. So let's see, 8 p.m. again, we're on the move. We've got another 8 p.m. right here. Now we're going to take our vertical tool and we're going to mark this 8 p.m. here. And what do we do next? We're looking for highs, which would be this, prior to the 8 p.m., that's our high, recent high, and this would be your recent low. Hope you're all seeing that. So again, we've got recent high. Oh, drop value down below if I'm making sense with this, guys. Listen, I'm giving you solid sauce here, solid sauce, especially if you are not able to trade at the regular New York opening bell. Right? High and low identified prior to 8 p.m. Once that happens, what are we looking for? Liquidity grab. Got it. Good. Now, once you get that, this is it. Identified. We've snatched the money right below the low. And once we've done that, we can identify, right? You could literally even decide that the only time you're going to enter at this area is if you get a pull back into the zone, right? So now you are seeing all of this happening. You're marking out this and you're waiting for price reaction around this area, to which is the market structure shift back into that area, right? And once we get a close there, you're zoning in for when price comes back here, you could literally take the setup around this area. So now you've got a long position opportunity here, long position, and you could grab it here. Your stop loss has to be below this wick, giving it enough room. And of course, your take profit at your 1 to 3. Yeah, and you're good to go. Yeah, seeing that? Perfect stuff. And you'd have had a plausible setup, right? You can do one trade for the day. Not every day is going to present two opportunities like this. You're looking one setup for the day, because one for the day can keep poverty away, right? Now, let's see if we can find another 8 p.m., right? 8 p.m. move. Right here is our 8 p.m. Good. We found our 8 p.m. candle. Now we take our vertical line and we highlight. Where's our high and our low? So we've got our low right here. And we've got our high just right here before the opening of the Asian, right? So now you're seeing this. I've back tested this over 100 trades. So I'm telling you guys, this is immaculate. And we've got way more for you. If you join our 3-day boot camp, which is coming up on Friday, link is down below in the description. We go live on Friday, Saturday, and Sunday, giving you the solid gems of how to become profitable in 60 days or less. Guaranteed, once you follow the blueprint that is given to you. The blueprint is necessary for you to follow. Yeah, so here we go with the low. Once we've got the low, what we're waiting on? Liquidity grab. Boom, chaka, boom, baka. Ooh, ooh, we got it. Right here. Right here. I don't think I should show you guys anymore because you're not liking the videos and you're not sharing it. Y'all need to be, that's all I'm asking for. Like this, hype this up, share it, give thanks down below, do something because I'm dropping value over here. Carrie giving you value for free, for absolutely free. So we took out the low. We took out the low, and then we came back into it. Once you take out the low, you can literally wait for price to come back into that area, right? And you take your setup into that area, stop loss below, and you aim for your 1, 2, 3. We have pulled back and closed inside the zone. That shows us plausible opportunity to wait for price to come back here. Yeah, and if you're doing limit orders, you could literally set your limit order right at the bottom of the zone, right? Because that would give you, you know, the perfect opportunity. Even if you said, okay, let's enter after this candle, watching price action, you'd be aiming for your 1, 2, 3. Yeah. Sometimes you won't get 1 to 3, but it's fine. You'd be able to lock in your profits. And you can get 1 to 3, but another plausible setup for the day. Let's go to another day. How many days have we gone? 1, 2, 3. Yeah, we're doing well. We're doing well. Let me just show you 5 of this. And listen, this works well with gold. This works well with your Forex pairs. This works well with your indices. And I'm telling you, go back, test it, and come back here and say to me, go tell everybody that, listen, I showed you some secret sauce. Secret sauce. So let's go again. 8 p.m. Let's find our 8 p.m. mark. Here we go. It's right around here. Let's take our vertical line and we're going to mark this 8 p.m. candle. It's right there. Now you can execute this on the 15-minute. As you can see, I'm literally on the 15-minute. You can mark this on your 15. And if you want to go 5-minute and do your entries there, that's fine. All right. That's literally fine. Okay. So we've got our 8 p.m. We've got our high already highlighted. Yeah. And in this case, this would be your recent low here. Here would be. But you do have some other lows here as well. So if you want to go for this high and this low, then that's also fine, right? That's absolutely fine. But in this case, if your high that you've identified is here, you'd have seen that we haven't taken out the high. And for the low, we took it out a lot later in the day. And then, of course, pulled back into it and pushed up, right? But ideally speaking, if you had this as your low, which is here, you'd have seen where price wicked below. And when it came back up here into the zone, closed in the zone, the volume of the candles were really tiny. They were not huge momentum-based candles. So you saw that we pushed down a little bit lower because what we were doing is to really aim for this order block here, right here. That's why structure is very important. And there is a lot more to this game. But fundamentally, if you were looking at this order block, you would have seen that, okay, would have come back into it. But if you were, just taking here and anticipating a setup around here, price action would show you that it's not ready for it. Ideally speaking, it's not. But if your low would have been here, which is the actual low, you would have been able to see the displacement, the shift, the pull back into price, and then of course wait for it to do something similar, and you would potentially get it. Now, depending on where your stop loss would have been, you could have been hit here, but that's fine. You can't have them all in one go. So that would be that day, could have potentially lost something. Now, let's look at this. This is another day, 8 p.m. right here. And we've got our low right here. And we've got our recent high right here. Now, I want you to pay attention to this. Right where this high is, yeah, we did not break above it. We created an equal high. Now that is fine. It will show you as well that it's creating it. Now, based on even this candle on the 15-minute, you would have said, this is not an engulfing candle. But then when the full structure happened and then you saw this, you would have seen that, listen, this is really moving down. Ideally speaking, below the low, we did not break below completely and then pull back in. We actually continue dropping massively. You're going to see days like this. One entry model is not always going to be the highlight. There has to be switch. There has to be some amount of changes that do happen. And you can clearly see that we're in a downtrend in this case. So on this day, what would you do? You could probably say, you know what, my setup that I look for, it doesn't show up, I don't take a trade, right? Or you could look at what market is actually doing and set yourself up for success based on structure. So we break below here with huge momentum. We pull back into it and reject. You do have a plausible opportunity to take a sell further down to your next zone based on your left area there, right? So we teach all of this in our 3-day boot camp in terms of the 3 best entry models that you can use with this. I'm literally just showing you one here, which is the liquidity grab below the zone and then displacement back in with market structure shift. So that's another day where you would have potentially not have a plausible setup. Let's see if we find 8 p.m. Here we go. 8 p.m. on the clock, New York time. And we've got our high there, and this would fundamentally be our low here. Okay, high, low. And I like to write them because I like to help you to see what I'm showing. High, yeah, right there, and or low. And we could let this be the last one, because if you want a follow-up video on the other entry models, you can literally drop follow-up down below, and I'd be happy to do a follow-up. Yeah. So low, high, what did we do this day? We took out the liquidity to the upside. Now, right here, fundamentally, when we broke above and we pulled back in, we came back into structure here and we got a little sell, not a lot. So we would have not even made our full 1 to 3, right? You would have seen that here. If we even said, you know what, let's wait for it to pull back here, we would have had our stop above this range and we would not have caught, we would have probably caught a 1 to 2. And that's fine. Some days are going to be like that. And that's why I fundamentally, once I hit halfway through my trade, I break even. So that's fine. You would have a small upside here. And that's just what it is. And it's going to be like that at times. But ideally speaking, you'd have seen where, this continued to play above until it fully had that lovely volume here for displacement, pulling back into the zone, rejecting off this high, right? And of course, forming resistance back there to drop it back low. So structure is the most important thing for you to pay attention to, right? But this setup is phenomenal stuff. Phenomenal. Another 8 p.m. and I'm gonna let this be the last one here. 8 p.m. and prior to the 8 p.m. would have had that being the high and would have had them being low lows. Okay. So you would have had two plausible opportunities here on this day because we broke above, right? Is this the 8? This the 8 p.m. Sorry. 8 p.m. we broke above, yeah, and created strong displacement engulfing candle here, and we continued down. We are now waiting for price to pull back into this area. Once it does, you've got an opportunity to enter their stop loss above. So short position, even if you enter their stop loss above this zone and you aim for what? 1 to 3, you would have made it. Then to the downside where the low is, what did we do? We took out the liquidity, closed back inside the zone. Now what we're waiting for is for price to come back here. Once it does, like this, you have the ability to take because you've got a rejection of the zone, yeah, and an engulfing candle. You could literally say, let's take a buy, aim, stop loss there, aim for your 1 to 3. In this case, you wouldn't have had a 1 to 3, it would have locked in 1 to 2. But that's bringing you in profits back into this zone ideally because you have to what structure. Because what this has been doing is reacting off the same zone. Yeah, good. And then you would have been in profits and, you know, everything plausible. If you even waited a bit until price came back directly here, if you had a, you know, what we call a limit order and your stop loss below this zone, and you're aiming for your 1 to 3 or 1 back into this zone, you'd be good to go. I hope you're seeing the picture. I'll end it here in terms of helping you to understand that this setup is immaculate. You can go implement it. You can go back test it on the pair that you trade and come back and let me know. Now, if you want a follow-up on the next entry model when it comes on to this 8 p.m. opening and this strategy that I would call the New York liquidity sweep strategy, then I want you to drop the word entry model down below. Also, let me know where you're watching from, you know, because this is really a USA setting that I've programmed here on my device here in London. But I want to know, where are you tuning in from, and do you actually trade the New York session like I do, even though I'm living in the UK? Let me know. Let me know. With that said, I hope you got some value from this, and I'll see you in the next tutorial. Remember to put God first in everything you do, because if he's in it, you know what I say, you're gonna win it without a doubt. Stay locked in, stay sharp, and keep shining on the charts. I'll see you in the next tutorial.